Alrighty, let's get started. I hope this time I'm gonna get it right. I'm not gonna forget to switch my screen. Here it is. Here's the screen right away before I forget. Give me a sec, everyone. I'm gonna post the links. All right. One more second. Bear with me. Alrighty, link is out. At least one. Here is another one. Whoever wants to join in. Hello, hello. Welcome, everybody. I hope my live chat thing is gonna work this time around. I hope the screen is working. Everybody can see everything. Let's ignore all that, just noise. Let's start with Tesla. Tesla is the most interesting one. I think most people are interested in. Arnon. Hello, Arnon. Hello, everybody. Hello. Just give me a couple of minutes. Hi, everybody. Let everybody, sort of the people join in. Hello, hello. Blondebeard, hello to you. Hello. Pablo, hello. Alex, hello. Hi, everybody. Hello, hello. Just give it a minute. Just give it a minute. Let's stare at Tesla, for example, right now. We're staring at Tesla. I hope the screen is working. We can see everything. So right now we're just we're hitting off of the diagonal resistance. You guys remember I spoke about several times over. Of course, we're not gonna see it properly here on the daily sense. It's sort of deformed a little bit, but here you can see how well we're sitting right on top of it right now. And we have a bit of upwards momentum. Hello, KZ. Hello, everybody. I'm kind of get started as we go. Let people join in while I'm just going to ramble a little bit, and then hopefully by the time people will join in, I'm going to get a little bit more serious. So again, 1 hourly implies to us we are having a bit more bullish momentum here, nothing crazy. Well, I hate to say that, but I told you so, guys. And I mean, it's funny how the reasoning or the sort of fundamental, the story to why these sort of things happen is late, as you can sort of tell. So the technicals, I mean, the technicals already show something that somehow happens to happen through the fundamentals or the events or the story that happens down the line. At the end of the day, the supports are the supports, the resistances are the resistances. Those who are panicking today already right away, I'm gonna say the same thing I usually say about these processes when the market ends up testing a certain resistance or a certain support. This is actually very normal. So those who are bullish and are worried and panicking, I don't want to tell you don't, right? You should kind of have your finger on the trigger, so to speak, at moments like that. You have maybe tighten up your stop losses, take profits, although you should have been reacting by now anyways, but that's not the point here. The point being that all in all, if we're objective and we're going just one time frame larger than the hour, or already kind of getting a far more bullish narrative, far more bullish sentiment, so you can easily ride back up into the ranges of 260 and 273.96 to be precise. But basically this range, this entire range, the price action could easily find itself back in that range, test it again, in fact fail, get rejected multiple times, and I kind of told you so. It's going to be a strong resistance, the whole area, the whole sort of range, if you will. So that's not such an abnormality if we will see that returning back there. Now, my current point of view, for again being more objective, you see, what most people don't realize, that the larger we go, it becomes more dominant. Hi, Mira. Hello. The structure that will appear on the larger time frames, and it has to do with all the assets that we're talking about, the indices. That's all. You might as well consider it as a foundational rule of the whole system, of how it all works. So it's actually very normal how we sort of seeing, again, I know it's kind of off, but basically something akin to this that I'm sort of projecting that might happen. But again, I'm just looking at what we're having as a as using our momentum indicator, very basic, but it does the job. Okay, but the problem is, again, the larger we go, and then you kind of ask yourself, what's going to be the time frame that you stop at? Well, first of all, due to the limit of data that you have, at some point you're either going to run out of data and you're not going to have the indicator showing you anything, and you're going to kind of have to rely on the best thing you had. But also, if we're looking generally at the whole structure, the whole formation, look at what happened. We've tested, we've given it an attempt, and actively we're already kind of sliding again. So it gets adjusted to the current time frame, depending on how it sort of combines for example, on the weekly, we're seeing the entire week within this one candlestick, of course. So with it, we're basically finding ourselves below that resistance. And the momentum is showing as if we're just a second away from actually accelerating. We're already starting to see that convergence, okay? You see conversion, diversion. So right here you see that we already have the conversion, then diversion. Once the D, which is the orange line, basically becomes dominant, as we know, we're having more bearish momentum, as you can see right here, for example, right? So that could be exactly what we're seeing here, simply being rejected by the longer term trend, okay? But then let's do the same trick, and I want to sort of show you guys how I perceive it the same way. All right, cool. So again, just one time frame larger. We're looking at the monthly. In fact, again, this sort of momentum implies potentially, to those who are more experienced and can determine what the implication of how much this is to go, so to speak, to what it can be an outcome of. But here I want to point out something that a lot of people are missing, and I've spoken about this in my previous video. How do you know that this is not what you're getting? The same scenario right here, right before that, the convergence and divergence right around this area, and basically a return downwards. So more so, you should perceive this as a sort of singular wave with impulses, right, in a particular direction. So how do you know we're not doing something very similar in this instance, right? So let's do the same trick again. Let's try and expand to the larger height. Thank you for showing up. I hope I'm not gonna bore you too much. But it is worrying. And again, I'm gonna sort of say the same thing. I'm not gonna be biased towards one direction or another, because as I tell you not to worry or panic, right? You can kind of see now that we're looking at this time frame in the monthly, you can actually see that the column, right, the entire body of the candlestick has corrected right below that resistance. So sort of, in fact, it shows that the market respects its resistance so much so that the bears were able to outsell the bulls all the way back to below that line, right? So it just kind of shows it keeps on retaining the trend over time. So again, if looking at monthly and looking at momentum, there's a bit of sort of disagreement here. And remember, we're just seconds away from earnings, so earnings could be the play. And if we're looking at this objectively, we still have 12 days before this candlestick gets locked, and it might as well trace all the way down. As long as it does not get locked, all this price action will take us slower on the sort of granular time frames, will make it seem as if it's simply going to retrace backwards, and sort of that's not an abnormality. Yes, we've tested, we've tried, but we failed. That's a normal process of the market. And if we're going to look at the S&P, it has some correlations to the S&P. It doesn't just sort of happen in in mid-air, so to speak. Now, looking at 3 months, which is the quarterly chart, which is the same idea as we had before, every candlestick combines all the price action into a single candlestick and gives you sort of, if you will, the averages and the combination of what it represents, right? That's why it's sort of so deformed and appears below all of this. Now, all in all, this looks actually very bullish. That looks magnificent, right? So the further out you're starting to look, although right now again, the reason you can actually see it on the larger time frame, even here you can see that the D is dominant, hence we're having the bearish momentum basically take dominance and come through to the price action significantly more. If we're looking at 12 months, we're simply not going to get anything, not enough data, not enough candlesticks to give us data, right? So at this point, we stop, right? We're forced to go back to the 6 months, and we're saying, well, it looks rather positive. But the thing is, what most people do not realize, we still have 5 months for the duration of this one single candlestick, and we don't really strike out rapidly. It's more of a prolonged process. So sort of what we're seeing is actually being hinted at the larger time frame, right? But so this is what we conclude off of Tesla on its own. Two things are sure in life: death and taxes. Slow down. I will try. I will try, Arnold. Thank you. I will try. Pardon me, ladies and gents, if I started accelerating and running too fast. But so the thing is here that even on the larger time frames, we can see, and you need to have sort of understand the importance of what these 5 months out for this candlestick to get locked mean. Okay, yeah, Tom keeps telling me, guys, anything and everything I do weird keeps Tom lets me know. It's just I'm slow to adjust. Bear with me, okay? It will take me some time before I'll be any good, but I'm trying. I'm really doing my best. So that's that. So from here we have to say the following thing. We know that the overall individual assets have high correlation to the indices. It's something we spoke about many times in the community, and sort of how one is tied up with the other. And so we have to, we cannot, it's that sort of same analogy that they keep on bringing up. And I'm saying sometimes you don't have to focus on the flower, you have to focus on the soil, right? Because the flower cannot thrive if the soil itself is poisoned. Or to give it a very different analogy, it's good for you if your stock learned how to jump 20 meters up, but if the ground just dropped 100, you're not even scratching the edge. You're not able to sort of catch on to something. Now, if we want to look, for example, right, if we want to look at the S&P right now, all in all, it's not a deep retracement and everybody's panicking. I want to remind everybody that these sort of processes can happen, and these are rather normal, right? For example, if we're just going to look at this process we had here, which is 2.5%, let's call it 2.5%, right? We had this correction. In fact, let's grab the height of it, right, and grab the low of it, so you can see it was, well, almost 3%, right? So let's kind of look at this. Let me remove this nonsense so we can see what we're doing. From here to here, all in all, 276. So nothing abnormal, right? These are normal processes as we're moving through the channel. The channel, as you can see on the screen right now, is still retaining upwards. I'm not going to repeat the same stuff I spoke about the gap in the earlier video. I highly recommend you watch it. But it's rather simple. To fill the gap, price action should go basically through to have it done and closed, done with. But as I've said and mentioned, we have many more gaps downwards, but more so, this sort of momentum, well, let's look at sort of the same analogy. If we're looking at these time frames, we're looking at the rather medium time frames, things that you can probably extrapolate, trades that would last maybe several days, a week. But how about the larger time frames, right? So what we realize that this just one wave, we're looking at the daily, which is a very important time frame that a lot of technical traders, in general, people like to look at, implies that we still have downwards momentum. And you can see, coincidentally, this entire process was about retesting, sort of finding ourselves testing the median of that trend, right, of that channel, if you will. And more so, you can tell by the normal behavior of the market. In reality, although people perceive it as up and down, more so it's diagonal. You have the factor of time and you have the factor of price. So inevitably we're going to be pushed to the right. So inevitably this channel is going to look the way it is. But the question is this time any different than the rest? And are we really going to test downwards just to test this support? All right? Get out of the way. And this support, just testing this support, and again, I kind of gave it a steeper angle, which I should, because we actually go down by the elevator, as Tom likes to say. Aaron, I'm a real more, all of you guys. The way, even just to test this, and remember something I've mentioned, that just testing this support, right, just testing the bottom of the channel, doesn't always mean that's it. We hit it perfectly and we hit off of it as if it's a real pinball. That's not really how it works. We're basically going to get potentially entangled, and sometimes that implies a significant deviation from that line itself. Okay, so don't get stuck with the narrative, oh, we closed below that price. It could happen. That's a normal process. You should more be attentive about sort of these checkpoints, the locations, the price that matters more. Now, if potentially we're saying this is going to happen, this is just on this time frame, we're going to continue outwards, then we should extrapolate and understand that, hi Mike, that the Tesla, for example, or Palantir that we're going to also look at, do not live in a vacuum. Although Palantir, for example, is far more affected by other factors than the S&P, but we also know, and something we've checked before, the S&P, the Russell, and the Nasdaq are highly correlated, even when they have slight deviations, which is not an abnormality, it's part of the process. Okay, so let's continue doing this sort of process. So from here, we can extrapolate, we have more downwards momentum until both of these lines, again, the K and the D, will find themselves fully underneath in the oversold territory. We'll have, again, that convergence momentum, okay? It's going to converge on itself. They're going to turn over, and then we're going to have potentially bullish momentum. So we can say, okay, we're continuing upward. So in other words, from here on out, most will not see this, but will actually have enough to maybe slide a little bit downward, so not that significant, right? Now, nothing will not allow us. This does not imply, what I just said does not imply that we can find ourselves at the bottom of this trend. Okay, just odd numbers. Numbers people like. You see, hi Black Mamba. You see, our human psyche and the way just the human mind works. We really like these round numbers. That's why they become psychological and so forth, right? But the real supports and resistances are usually going to be very odd numbers down to the cent, and these supports that are supports and resistances, depending on what we're going through, that are represented by the round numbers, these psychologicals, usually do not last too long. They are just kind of just stepping stones. They're just something we do in the process of, yes, we test them, yes, we can get entangled with them, meaning the price action can get sort of, let's pretend we're talking about 5,400. You can see the price action sort of getting stuck, testing the level, and eventually getting free, right? So all in all, they're not that powerful, all in all. Now, what we so let's continue with the time frames. Now, the real trouble here, the real troubling thing here appears here, right? You can see that we are actually, all in all this time on the weekly chart, we've been testing the top of the channel. So the same idea, but on a larger scale. And here on the momentum, you can see that, wait, we have a lot more momentum to go downwards, right? Because we're just now starting to have that, the convergence and divergence, right? Because once it converges, it diverges outwards, and we know what happens afterward, right? So we're going to see something akin to this. And these processes, as they are far more prolonged, right, they can take a lot longer time, they actually end up bringing us deeper. For example, if you're looking at this channel, you're going to realize that our near-term supports, let's not put them too far, right, because it is ascending, so it puts us at about 5,337, for example. Then we have other strong supports, right, but it will have to potentially either break or reside on. And the fact of the matter that the channel looks the way it is doesn't mean certainly that we're going to drop all the way down. But this and the period of time we have ahead implies that we potentially do. Okay, that is an important distinction. Now, if we're looking at the monthly, let's see, because we have to be objective about all these time frames. And the same thing as I've just said before. But remember, the larger the time frame, the more amplified it basically becomes. Okay, you need to consider that one factor. Give me a sec, ladies and gents. I just need to do this one thing. 1 second real quick. Having an issue with my Discord. I'm just gonna turn it on and off. Pardon me for this. It says I'm just gonna start it. Okay, so let's continue with this. So, and you need to understand that in the monthly as well, just simply by perceiving this low, which by the way, you can kind of notice that this channel within itself represents if the median that we saw on the previous smaller time frames would appear somewhere here, the bottom, so that the bottom was here. Now you see that this itself represents the median of the overall overarching time frame, right? So you can see it basically implies that potentially we're not just going to see this bottom, we're talking in here. You see how it sort of gets readjusted? And since it gets readjusted, we get a different number. And here you can see on the right side, we're talking about 5,000. And that's just through the sheer momentum that will be appearing here. Now, some would ask me, okay, so Greg, are you basically saying we're going to test the bottom of this trend as well? Well, again, you be the judge. If you look at an overarching sort of longer duration, you're going to realize that that's what the market has been doing for a long time. So we can retain, right, a bullish trend all along. Hello, Pedro. 1 second. Okay, wait. Okay, so as you can tell, basically, even by the way, harsh deviations. These harsh deviations happen due to conditions, our sentiment, how we perceive the market, and what is happening at that particular point in time. I don't have to explain what happened here, right? 2020. I'm not going to mention the unpleasant words YouTube doesn't like. Which reminds me, ladies and gents, those who are new and are not familiar, please smash like, subscribe, bell, everything, all that wonderful stuff. I would tremendously appreciate it. More so you'd be always notified when I'm doing something and you'll be up to speed. So that's kind of how I'm perceiving this. And you see, there's a bit of a caveat here. Okay, so for example, let's do 3 months, right? 3 months shows that we have more momentum to the upside, sort of from that perception, right? That the rhythm of this indicator works by going up, down, up, down, up, down. No, that's a bit of a problem. That's a bit of a misconception. And here I would like to point out how these highs are slowly kind of decreasing. We don't know about this. Again, this is under question, right? But potentially what we're starting to notice is more or less of this decreasing trend. So how do you know you're not going to get something similar here and and sort of this, again, conversion of the forces and downwards? And I will say the following thing. If you break down and understand that the month represents a partition of the 3 months, we're already starting to see, it's almost like the ability, right, to zoom in and see what is happening right here between these two lines in a bit of a more granular form. Knowing to make these correlations and connections between, for example, the 3 months chart, right, and what we're seeing here, and understanding how much more time does this represent. We have actually just this own process can take, well, easily 2 more months, because that's how long we have before this candlestick gets locked, and we continue with the process. It's almost the same process that we're doing, but in slow-mo. The problem with it is that we, the average people, are exposed to the market on a daily basis. Think about it. We feel the pain and how the market is pleasant or unpleasant on the daily basis. So looking at this would be better to look from example. That's why we do the whole daily thing, right? We look at the daily, but you need to zoom out. So all in all, for example, the same way I'm not biased about movements upwards, because my expectation, you guys know, I've been seeing this, noticing some issues with the overall economy, the market, various sort of signals that I've noticed, and I've been beating this drum for quite a while and expecting the market to have a deeper correction. So people are asking, Greg, is this the deep correction? Guys, I don't know. No one knows, but I also can tell you that those who are telling you with certainty that this is it are also exaggerating. They're just simply playing into their bias, right? Because the same way I told you, once we slip out or we go a little bit overboard from on the top side, it's not a crazy thing to expect the market to go a little bit overboard on the bottom, right? So for now, before we actually have a distinct movement that continues downwards, I can argue that we're still retaining this support, right? Although we're below it, in reality, in actuality, we're going to continue moving upwards, right? But remember what we saw on the other time frames. So it doesn't play along. The scenario has to be singular. You cannot come up with 2 different scenarios because you see them in different time frames. No. The scenario is singular. It's just that some time frames allow you to see the granularity, right? They allow you to see sort of how the process will take place. And there are blind spots, inevitably, in between some of these time frames and in between processes. You'll end up having certain blind spots that you'll not be able to tell exactly what's going to happen there. And that's why sometimes you can hear me guys tell you sort of this further away, distant price target that we're aiming for, and I warn you in advance that the price action can take one or another path doing it, right? And it can be actually very unexpected, but I am very adamant on the targets that I give you, right? Because the tools, inevitably, the way they work, do have some blind spots. You can follow along, but for that you'll simply have to, be in touch with me every single day, maybe a couple of times a day, to sort of clarify and make sure you understand what is happening. It's almost like looking at the traffic from your windshield, right? The traffic adjusts and changes all the time. It does not make you change and adjust your destination. Okay, think about it from that point of view. Now, by the way, guys, if I'm rushing or I'm not clear or something weird like that, please tell me. I'm not even sure if the chat is working. So yeah, I hope it's all working. So what else? So let's continue. We looked at Tesla right now. Let's kind of, since we haven't looked at it in a while, let's see what's going on. So you see exactly what I was saying. Never be biased. Never say, well, the market is dropping. It's going down, so it's going to go down. No, that's why we have tools to tell us actively what's going on and give us some certain projection some time out. It cannot be always all the way out, so to speak, right? Depending on the time frame that you're looking at, and also depending what sort of information that you're looking to find in. Because if you're a trader, this is one of those time frames. If you're a daily trader, if you're a day trader, if you're a scalper, this is sort of the thing you'd be looking at, right? But if you're an investor, this is almost meaningless to you, because as I've said before, if you do not exercise your trades, this is meaningless. You might as well ignore it all and not absorb all the emotion. And this is another thing I would advise anybody and everybody who's in the industry, doesn't matter, trader, investor. If you struggle to look at the chart, don't look at them. That's sort of the regular advice we used to give, and I myself used to give it a lot. And I hate giving that advice. Look at the charts. Fortify your mental ability to deal with these things. Don't go, well, it's hard, so I'm not going to look at it. You're an adult. Imagine what would you tell your kids to do in such a situation, right? Deal with it. Get a helmet, tough it out kind of thing, right? Learn how not to act upon your emotions. Learn how to be calculated. Educate yourself. Spend some money on education. I actually advocate for that. Just good education, not just random YouTuber nonsensical nonsense that there's plenty of. Make sure you really are being taught by a person who knows what he's talking about. Apple is having a fun couple of days there. So yeah, we're having a bit of a breather here with Apple, by the way, which I think is going to continue going downwards. I'm just going to say that. The overall trend, and it's actually crazy how well this whole thing played out for Apple anyways, under the conditions and everything. It seems to be like it's building a head and shoulders pattern. Of course, it's too early to say with certainty, but as you can tell, you have this wonderful limb, then you have this wonderful head, which potentially is going to result, which give or take in this vicinity or in this trajectory, doesn't have to be accurate, doesn't have to proceed in this slope, but again, taking us into earnings, right? Potentially giving us a little boost, maybe creating that right shoulder and bringing us downwards. The end of the day, by the way, head and shoulders as an overall overarching pattern usually implies something more bullish. It implies that the end result of all in all of it all, although the process will be unpleasant, all in all, it will end with upside. So that really what it shows on the larger time frames. Although if we are on the larger turnaround, it more so implies that there will be a deeper correction. But we'll have to wait and see for that. We have exceeded Apple's normal range significantly. So some would argue that it's justified. Some would argue that it's not. It's more about the story. But as you know, Apple is a significant part of the S&P. So inevitably, if we're predicting a correction on the S&P, guess what? Apple is not. If it rains, Apple is not going to get wet. It's just going to happen. Palantir is an interesting one because we have the conversation about the rotation, right? Everybody keeps talking about the rotation, and everybody keeps talking about how the small cap, and how it's the time of the small caps. I'm not a person of those who know me. I really hate drama. I don't wanna, this guy is wrong, that guy is wrong. You all know the names, right? It's not about that. I'm not here to clickbait or anything of that sort. I do understand. First of all, I don't know how many a lot of these experts do their analysis. There's plenty of ways to conduct your analysis and various factors to consider. I don't know if all of us do sort of the same path, use the same tools. I do not know. So I'm not gonna talk on their behalf and tell and say they are wrong. The only thing I can do here, instead of just brewing drama, I'm going to present what I'm seeing. And I said we potentially will see this 29, and it's going to be a difficult, strong resistance area, right? We're not going to just slip by. I said, I was talking about this 2907, those who are not sure. And we're starting to see this slow turnaround. For example, you can see I have two overlapping channels going on, right? And one channel is going upwards, one channel is going downwards, right? So who is right? I'll just tell you that the smaller channel is the fast moving one. It's based on 100 candlesticks, depending on the time frame that we're in, and this one is 420. So meaning this one is a longer, slower moving. So this will start showing up and start representing a turnaround, as you can kind of tell by the descending highs, right? Lower high, lower highs. Is it certain? And I've showed this before. I showed the larger sort of trajectory of things here. Oh, sorry, pardon me. Give me a sec. Okay. So as I was showing sort of the larger trajectory here of things, it does seem like potentially we are going to be moving and having a little bit more upside here, you see, but we're already starting to have convergence, okay, between the forces, and becomes something that it's not necessarily evident to the average observer, okay. You see it as the market is going down, it's having upwards momentum, and so it's going to go up. So it's going up, so it's going to go up, right? It's bullish, so hence it's going to be bullish. That's not really how the logic of things work. I mean, look at it this way. If you look at this, this is a small correction, and notice how I told you guys how we have sort of these larger corrections, right? And in fact, more so, I would want to separate. And something that I keep on saying, and because most here are not professional and don't understand the real difference between the two, there is a huge difference between a correction on an uptrend. Imagine that as having a trend upwards and then has a certain correction, right? Because you correct, right? You overshot and you correct downwards. Look at it this way. But there's also the existence of a downtrend, a separate downtrend. So just to kind of connect the two ideas for you in your mind, you can have an uptrend, a correction, and then a downtrend, which, by the way, the back end of the sort of this part will be, again, a correction on the downtrend as well, depending on overarching. S&P is not optional. Okay. So on the overarching scale of things, basically what I am starting to see here is a bit of a breakage, right? So it does not look as good as we would like it to be. But remember, we're not going to be biased. We're not going to get stuck because, well, that's what we're seeing on the, that's what we like, right? I'm saying the market is going to correct downwards. So I'm going to find the right time frame to sort of accommodate what I'm saying. In reality, and this is something I kept on saying for quite a while, Palantir has been doing quite well, right? I mean, again, look, daily downwards, right? But what about weekly? You see, we're still doing well. We still haven't switched over, haven't flipped over. So this process, and it's something we used to sort of mention in the community quite a bit and explain, the market has this turnaround process that it's almost like a very slow double-decker two-piece bus that is really taking its time, or a whale or whatever. And in fact, you can kind of see there are some hints. It smells like we're having a turnaround. The candlesticks themselves, I'm not going to go into patterns, although this is very broken, but still you can tell by the sort of the margin, the difference between the price, right, where we started a certain candlestick, where we ended, what we were testing as we were moving upwards through these stepping stones. And we're now having a lot of uncertainty, and it comes through the price action as well. You have to agree that these two candlesticks look very differently to these two candlesticks. These two represent certainty, confidence, right? These two are, to say the least, sketchy. And conveniently enough, we can kind of recognize again that below that 2907, right, we're kind of having that slowdown towards that major resistance. And remember, even if we are in a bullish trend overall, it's not going to be abnormal to test the bottom as we move forward, especially if the indices are not going to be doing well. Okay, so look at it this way. If we're gonna just kind of test the bottoms, and this is the number I've spoken about. These numbers, ladies and gents, that I mentioned are not random. They are based on rather stronger, they are predicated on locations that combine not just resistances and supports, okay, but stronger resistances and supports. It's the combination of several strong forces into a single price range. And what we end up with is when the price does retract, it even the bots themselves, and just the sheer sort of just magnetizing process that is very similar to what we have with the gaps, even if the price action ends up finding itself not exactly at that support or resistances or resistance, through our because the technical analysts, because of the bots, we work in very similar ways, which is funny to say. Most of the technical analysts work pretty much like the bots. The bots are just more efficient, all in all, if done well. We perceive these things in a very similar way. So even when we end up not exactly there but close enough, we are far more probable to test these areas. Okay, so that's not going to be an abnormality, even if we end up in a certain on top of a certain support of a channel, but we're stronger to a certain resistance that have been attempted to be broken for a long period of time. We're going to test it as well, breaking out of the channel to do so. So that's not going to be an abnormality as well. And oftentimes exactly what happens. People often are simply not aware of these levels that are highly important to be tested, and then are surprised to why the price action slipped out of the channel that this or that analyst said. Completely normal phenomena. Okay? Remember, we're the same way. It doesn't matter in which direction your trades or investments are pointed towards, upside, downside, doesn't matter. Never be biased. The same way we can have that sort of slippage, as we refer to it, on both ends. So as it can happen on the upside, it can happen on the downside. Never be biased. Have confirmation, certainty. That's it. I think that's sort of it. Sadly, as I said, you get the picture. It's all the same picture. Nothing really changes. We're just far too hot. In fact, these will take quite a long period of time to change because, believe it or not, again, even for example, this candlestick will get closed, locked in 12 days. This overall process is something that takes a long time, and next candlestick subsequently again will take a month to get closed. So those are the slower moving processes. That's that. SoFi actually surprised me quite well. I didn't expect it to break back to 8. Of course, as you notice, the narrative is if SoFi is going up, so it's gonna go up, right? Everybody's 9, 10, 11, a million. No, we just tested the same sort of, we failed to break down on this attempt. As I was saying that we're going to go slowly towards 4, right? And remember, as I said this in my video, my original SoFi video, it's not going to happen in this sort of straight fashion. And I'm just going to emphasize how these processes are rather normal. So you see, we're going downwards, but within the downwards process, as you can tell, we can have significant highs. But all in all, we're retaining a downwards direction, right? So in fact, testing the 8 and failing the way we did implies to me that SoFi is continuing on the path that I've expected. It's just that, as I said, I've probably expected to break earlier than what it will end up doing, and will probably take a little longer. If it's the near earnings could be the catalyst, the overall market, but still the overall structure, the overall trend, as you can see, implies that we will be moving downwards. Okay, that's SoFi. Lemonade actually really impressed. One of our members, Alpha, shout out to you, brother, asked about Lemonade, and I did not expect it. I mean, I did give these ranges, as I said, right? I gave certain ranges, as we can see, really pretty much very near to my expectation, but the ranges that I give are not, it's something that I extrapolate out of the data. Does that mean I really expect these supports or resistances to be tested anytime soon? Not always. And I was implying that I'm not seeing this happen that far, that quick. Lemonade has a decent process ahead of it. Sadly, Lemonade pretty much squeezed out all the juice during that process. So I would start expecting Lemonade to start turning around rather sooner than later. Sadly, we're not ready to break out through that level. If you can see that 2506, we're basically testing this level again, which is normal, but with this momentum and the overall market that I showed you earlier, I doubt that we're ready to break this. Even if we're going to slide a little bit above test it, I do think we're going to retrace back to these as a sort of the first step towards the 11s, and then we'll see, but we might retain them. In fact, I think if things are going to get hairy, if you will, Lemonade the best solution for it. If not growth, right, then staying within that channel is going to be rather healthy for it. All in all, it will pay out. It's all about survivability and survival at times like these, if I am correct. Again, remember, I could be wrong. All of these are just my meandering thoughts and opinions, and I could be an utter idiot, just a dude on the internet who shares his opinion with you. Look at it this way. At least I hope you're entertained somewhat, some of you. Ladies and gents, I'm kind of sort of almost done. So really quick question, one or two, if you guys have any. I hope I was clear and, I wasn't rushing too fast. Those of you who know, a firm, same shtick. We're, again, a bump in the road. The firm is just very volatile, so it can do these wonderful waves, but all in all, direction is still downwards. Those of you who know, we're waiting for a firm to hit about the 20-ish target, maybe even slightly lower. Let's just call it 20-ish for the time being. Let's not get carried away. So 20-ish. That's that. Ladies and gents. Oh yeah, NVIDIA. I almost have not mentioned NVIDIA. NVIDIA is right now testing this. NVIDIA is testing this wonderful 117 support, as you can kind of tell by my screen right here. Rather obvious, the whole thing. Again, some bullish momentum. So as we know, not always a thing that happens overnight, right? So we're still have this maybe upwards correction back to these same levels on the upside, maybe even testing this area, which gives us, give or take, about 124, 25-ish. NVIDIA, yeah, NVIDIA, yeah, here we go. Just, I'm doing NVIDIA. Did not forget about them. And all in all, okay, I mean, again, remember, NVIDIA is a part of the overall market. It does not live in a vacuum, and as you start looking outwards again daily, so again, here is actually more visible how this is what's really happening here. So although it's moving up from that point of view, but no, it's really moving down, and it's just a process of, it's just not linear. It's not going to drop down and that's it. The rhythm is not as most people perceive it. It's not just up, down, up, down, up, down, up, down, up, down, up, down. It's a little bit more complex than this. What else? So yeah, sorry, I was doing this. So basically, if you're looking at the monthly, which is a very important time frame, and you're again starting to see some weakness coming through the price action itself, it becomes rather evident. I mean, look at this, this is rather confident, and this is somewhat of a slowdown. Can this be something akin to this? Yes, it can. Not with this time frame, not with this momentum. Those kind of differ. And you see, this was just kind of a bump in the road, a part of the process. But once we start doing the actual correction, let alone the down wave, which is implied here, you do you. Again, this is not financial advice, as it says in the beginning of the video. You do you, but I'm just showing you what I see, right? You do you. All that wonderful stuff. And as you see, even on the 3 months, on the quarterly, which we still have 2 months of, but we're already starting to see this again. At this point, it's, you see, imagine that on the minutia, the micro, if you are able to see, sort of, to give an analogy, imagine you can see how the tire is moving, the minutia of the tire moving just slightly in whatever direction, and if you could slow down time and recognize that it's doing that, you could see that the car is turning in whatever direction. So here you can see it in real time on the market. It's just that it's so slow, and more often than not, people do not look at the market, first of all, with using candlesticks at these time frames and using these tools and using these supports and resistances to understand how it all works into one another. It's a whole system. It's not just, oh, I look at this indicator, that means I understand everything. No, it's far from it. And at which point, by the way, if I can do this horrible shout out, probably a lot of you already know and are familiar. Community, the public channels. We discuss everything and anything from all the topics you can see and everything and beyond these. Of course, you can always take the next step and actually participate in our members part, basically in the private server. They're all combined, they're all together in the same place. It all has to do with the roles you have and things of that nature that will transition. Shout out to Tom the Legend, the one and only. Tom Nash. We have his amazing Value Academy, in which he teaches you how to do proper DCF, how to use WAC, how to use all the tools and understand how to actually come up with an actual value for a company and understand whether you want to dive into them. And of course, my academy, in which I teach technical analysis, advanced technical analysis, not the stuff that I'm actually showing here, the more advanced stuff, the stuff that takes entire lessons and sessions to understand. If some of you who are not in the Discord and want to join, don't forget when you join, as you can see, press the button. It's very important, otherwise you'll be stuck in limbo. And if you are already a member and still stuck in the public, don't forget to follow the FAQ channel that tells you, gives you all the instructions of how to connect your accounts, what do you need to do so it will all work and you'll get your roles sorted out. That is it, by the way. Shout out to that amazing community again. We're making huge strides and steps towards 14,000, which is just bonkers, but I believe in no time we'll see 20,000, so don't miss out. Join us, join our community. That's it, ladies and gents. Let me check the chat that I didn't miss anything. Wait, you talk about Palantir already? Yes, I have. Yes, I have. Brian, I have already spoken about Palantir. Just to kind of bring you up to speed in a short summary, as I said, we are testing these levels, nothing abnormal. Again, I did say that we potentially are going to test this 2907, and as we see, we kind of are getting rejected by sort of slowly till now, but I've explained also how and why it's not the story about Palantir. The story of Palantir is not just about Palantir. It's about the environment. The asset cannot thrive in a problematic market, right? And we do see signs of a very problematic market. Everyone also wants to make this very political, or just kind of see how the political game, plays, how it will all play into the political game. First of all, we don't know if Biden already has dropped out of the race, which most more reliable, although unfavorable, media sources imply that that's not the case, that he's not dropping out. Although I will say, if the hints are so heavy and thick at this point, it is a probability. But still, regardless of, with what the Democrats have created and the overall geopolitical situation we have right now, and everything all together, if combined into a single mix, and again, this is just my point of view, my opinion, my meandering thoughts, I could be an idiot and wrong, but I think Trump will have to spend the first 2 years of his candidacy in fixing a lot of stuff, and a lot of the things that were done still haven't showed the side effects of how much more pain they will bring into the economy. A lot of things, of course, have nothing to do with them. So all in all, even with Trump being a great businessman and potentially taking the right steps into fixing and correcting the economy, getting the US out of this high inflation condition, getting slowly over time correcting unemployment, because sometimes you do want to have higher unemployment, which is a weird situation, I know, but you do want to have it. You do want the process. Although right now we actually want to see employment switch over. We do want to see smaller unemployment claims coming into this process slowly, of course. We cannot see salary hikes. That will be counterintuitive, counterproductive to the overall economy. So there are a lot of factors at play here, and of course oil, which I've mentioned today. I'm gonna, why not? Let's just drop a little one, because look, 78, and I've mentioned how breaking below 80, although my anticipation was that we will break certain supports and resistances that I was talking about earlier already, and we will go. Actually, do I have it here? I think I have it in this chart. So I was already expecting, yes, that's the right chart, expecting us to actually, as you can see, and I'm going to stand behind sort of the things I've said, and even if I got them wrong, my anticipation was that we will break these, pardon me, 86 levels and solidify support and continue with the trends. For right now, it actually seems, pardon me, the other way around, but on the overarching sort of cycle and scale of things, it seems as if it's more probable that we're going to continue upwards. Again, continue, although it is more of a process, a retest, right? And it got prolonged, but still, the way I perceive this is that oil will increase in price. And don't forget, some of this drop in price is a subsequent side effect of the big reserve that was found by this Kuwaiti company that represents roughly about 6% of all oil reserves, which is quite significant. It's a big oil pit, if you will. Although you need to understand as well that finding it does not mean tomorrow we pull out oil out of there. In fact, from here to there, the process is very long, and it's not like the U.S. is doing all that well right now. With its policies with regards to the Middle East and just the overall geopolitical condition. So all in all, I wouldn't rush and say that's it. Oil is dropping and everything is nice and dandy. In fact, I would still claim that although the process got prolonged, and more so, I spoke about this as well, oil bites into smaller companies' profit margins already at the 70s. At 80s, it starts to bite into bite heavily into profit margins of the larger companies. Don't forget, it's not just energy, but raw material and other factors. Oil is essentially correlated and connected to all facets of life. So it affects companies even more so. So us dropping to 78 and testing 78 again is not an abnormality under the conditions, but more so I would like to take your attention to the fact of the matter that, look, here we were testing it as ceiling, right? So resistance, and now we're testing it as support. So that process within itself is actually more or less of a normal process. And as time goes by, these resistances that we have to break actually become easier to break. Consider that as well. All right, so that's that with regards to oil, and I spoke about Palantir. Yes, Brian. Yes, Brian. Yes, what are you thinking on the overall for the Nasdaq? Same thing. Nasdaq and S&P are highly correlated. It's basically identical. QQQ, you can look at it, although a derivative, it's basically the same thing. Trump effect should lead to oil prices lower. Eventually, yes, correct. Black Mamba, you are correct. Eventually, Black Mamba, I think you were on the previous stream as well. Awesome, if I'm correct. But yeah, I've mentioned this as well. Over time, it will look. Trump is a good businessman. He's a good diplomat. That's just the reality of things. In general, he's a smart person, and I say he's smart not because he knows everything. No, he doesn't, and he admits that. He's smart because he knows where and when to listen to the people who do. And he surrounds himself by experts who he is siding with on certain agendas and speak the same language with him. So I do believe that the overall outcome for the US, Trump taking the candidacy, taking the White House, will be very positive. But the sad reality is that, and I'm not gonna, again, it's not about, slinging dirt, but Democrats have done a lot of damage. And more so, I would claim that some of the damage is not yet clear. Wait when Trump goes into the White House and we'll realize what is hiding under the rug. Okay? I'm sorry, but the Democrats are not that great with handling finance, and in general their decision-making process is very weird, and their solution is printing money and advocating for printing money, rather, because they don't print money directly, but let's not talk about that right now, and spending a lot while not really on a good solution, if you will. Sometimes it's not just about spending a lot of money, throwing money at the problem. It's throwing money at the problem in the right way to actually resolve the issue. Okay, so I wouldn't say what Monday, Mike, the real Mike. I wouldn't want to talk about Monday right now for the Nasdaq. The same reason, sort of. Again, we would like at, at weekends like now, for example, we would want to see the market settle in the way it would, right? And then when the next week starts, as we're gonna digest all of this, right, all the events, and hopefully we're not gonna get new events that are gonna amplify everything, right? It will be smart to judge the next week. Monday is usually determined on Monday morning, kinda. That's the reality of the thing. I can give you an assessment, but it's pointless. In fact, due to what we saw today, it's very highly probable that on Monday we're going to see some upside, right? If it's interpreted how we're going to see it on the S&P, for example, potentially testing some of these levels we can see right here if we're kind of eyeballing it, right here even potentially can test some levels higher, but in my overall assessment, as you saw, we're going to go down. So you see, if you're creating higher lows, right? I mean, sort of, if you're doing this sort of, imagine, right? Let's pretend for a second. All in all, I'm focused on this. I'm not focused on these. Normally I do, actually. Normally I do, and I capitalize on them in various forms on individual assets. That's the swing trading idea. But you see, when the trend is strongly moving downwards and I'm trading upwards, that's not a good idea. Again, you need to separate when it's a good idea to take these swings and when it's a bad idea to take these swings and when you should avoid them. Did that help, Mike? I hope it did. Anyway, ladies and gents, market is closed, so weekend is upon us. Have a wonderful weekend. I tremendously appreciate you joining and participating and all that. Again, don't be shy. Ask your questions. I would tremendously appreciate it if those who are not familiar or not on our Discord, the links are in the description below. Join in if you want to support me with all this amazing endeavor and all that crazy stuff. Unless you're already a member and you don't need it, so definitely don't. Resubscribe and have double subscription. But if you're not a subscriber, I do recommend you do. This is an amazing resource, the whole Discord and the community in general. Of course, if you become a full-fledged member, you get access to the Zoom calls and all that great stuff Tom and I do in the community. Yeah, Mike, ladies, gents, all of you, have a great weekend. Thank you for your time. Bye bye.